Okay, we're on this video Sunday 14th of September 2014. Hope your trading has been going well. So there's been nothing on the Emini-Watch website for about 2.5 weeks. And so about time I did a video update, but the reason for no activity is because we've been traveling and taking a little bit of time off, which has kind of been good. Finally arrived back here in Biarritz in southwest France, which is one of our homes away from home. Having spent 10 days in northern Italy, which was brilliant. We were in Milan and Lake Como and Venice. First time in Venice for me, and just an extraordinary place. I think there's no place on earth like Venice. Just unbelievably beautiful, and so much to see and do and learn. So that was kind of been great. But in this video I want to talk about what's going on with the markets. I want to do two things. I want to talk about the impending seasonal trade, which is the September effect, which is kind of potentially lining up, and also just want to talk about the Forex markets, because last video I did, I was way too early on picking a little bit of a local bottom in the euro, and just want to talk about that for a couple of minutes. So here's the euro chart, and this peaked out, pullback, dirty end of trend, Rambo patterns at the highs, and then this downtrend was set off by the ECB, Mario Draghi, and all the announcements. And I should know better than this, because last 2-3 years, basically all of the big trend changes have been set off by, and the big kind of moves have been set off by central bank announcements, by the Fed, by the ECB, by the Bank of England, and so on. And this first move started off with this exhaustion kind of sell pattern here with the blue professional bars. That was a Mario Draghi speech. Then it had a little bit of a rest here with another Mario Draghi speech. And the last time I put a video up, which is 2.5 weeks ago, I was seeing this left shoulder develop here on the euro, which was coming with an exhaustion pattern. I was saying, yeah, maybe this is a place where we might see a little bit of a left shoulder, have a little bit of a bounce back to a pullback and a downtrend. Was not suggesting that the downtrend was over, because we're in downtrends, because we're through support into a downtrend on the daily chart. Same thing on the weekly chart. We've broken below a cyclical support on the weekly chart, and the commitment of traders is all negative. So all of those things, all I was saying was we'll have a little bit of a bounce, I think, because we have an exhaustion pattern. Well, that was way too early, because it's going to come with an ECB, a Mario Draghi type announcement. Of course, that's what happened on these 2 days here. We had ECB announcement, Draghi spoke, and then we had this lurch down into 129. Now that is looking more like a left shoulder. So this exhaustion pattern here, a little bit too early, but with this one we have another exhaustion pattern, pro signal exit, blue professional down bars, plus a Rambo pattern with exhaustion. Rambo and exhaustion, when they kind of line up close together like that, that is unstable. Again, that's a huge rush by the amateurs down to new lows, and that's the kind of place that we're likely to see a left shoulder develop. So apologies for the last one. This was way too early at the 131, 132 level. We had to wait for the Draghi speech, and again an exhaustion pattern mirroring the exhaustion cell that we had here. Far more kind of extreme in terms of its activity. That's the kind of place where we'll start to maybe form a little bit of a low here and kind of have a kick back into a pullback and a downtrend. So that's a rejig on the euro chart there, and of course the same type of pattern you can start to see in a lot of the other charts, particularly the dollar index charts, and I'll just rip through those really quickly. Aussie dollar, now Aussie and Canadian, now this is really interesting. The Aussie was really holding up really quite nicely at 92s, 93s over the last several months here. We had this congestion pattern, pullback to end of trend. But with the activity over the last several days, that is what has really weakened quite substantially, and we're through cyclical support on the daily chart. So we're starting to break down into a downtrend here. Again, pretty big reading, but no blue professional bars kind of coming here. But finally, the Aussie dollar is starting to fall in line with all these other currencies against the US dollar. So that's kind of good news in terms of when all of those kind of come together, dollar index is on its way. And then dollar index, again, talked about this so many times. The U-turn that we had in the dollar index, pullback to end of trend, exhaustion pattern, bullish divergence, set this thing off into an uptrend. We had a way strong uptrend kind of going on here up to 85. Now again, flip side of the euro kind of pattern, we got another exhaustion pattern on a left shoulder, bearish divergence, come in a whole bunch of blue professional bars. That's the kind of area where we have just a little bit of a pause and an uptrend, because we need to come back down down, gather ourselves, find a pullback support level and kind of go off in this direction. Japanese yen kind of lurched down again through another kind of support area into this downtrend. We're hitting all kinds of exhaustion patterns kind of down here again, being led by the amateurs, Rambo patterns and so on. So kind of reaching extreme levels here after we fell out of bed out of this, kind of high 90s type congestion area. British pound, bang. Now this one's interesting because we got the Scottish independence vote kind of coming in, and that's what's driving the British pound at the moment. So this lurch down at this point here was where we had the latest opinion polls come out of Scotland, where for the very first time the yes vote, the independence vote, kind of crept ahead of the no vote, the stay within the union vote, and that's why we had this latest collapse down from 166 down to 160, 161 down here. But exhaustion pattern with Rambo, always a little bit unstable, so just kind of watch for that. And potentially, I think the vote's on the 18th, which I think is the Wednesday of this week. Potentially, if they do vote, the net is to not go independent, to stay within the union. We could have a really quite extreme rally in the British pound. It's still in a downtrend. I'm not suggesting that the pound's going to break back up into an uptrend, but all we'd have is a strong rally back, just purely based on a polling result. And so watch for that. That's a potential one that'll come back into a pullback level, resistance pullback level in a downtrend, which would go nicely with what we're seeing in the euro, as well as an extreme exhaustion kind of play down here. And then the Canadian dollar, just like the Aussie, has started to break down. So the last one up here was a test back up into the 92s level here, blue professional bar, and we're breaking the lows of that one. It's almost like a U-turn coming back down, and we're breaking back down. So all of these, so Canadian dollar's weaker than the Aussie, but the Aussie's kind of following along now, and so all of those currencies are playing down against the US dollar. But we've reached these kind of extremes that temporarily we could have a little bit of a bounce back up. Now, because of that, I think the equities market. The equities market in the US has been incredibly strong, and this is because it's all flowing in the dollar index. All the money around the world, the kind of loose change is running into the US dollar and US kind of assets and being pumped into the stock market, because that's almost like the only game in town when you kind of look around all the kind of alternative investments for it. So the strength in the dollar has been because of money flowing into the US and flowing in particularly into US equities. But if we have a little bit of weakness in September, which is this kind of potential seasonal trade, we could have a little bit of a drop off in the dollar index, a little bit of bounce in the euro, bounce in the pound, because the equity market kind of comes off again. So they've been moving in sync. The dollar index has been going up and the equities market has been going up. But if we have a little bit of weakness in the equities market over the next 2 or 3 weeks, we could have that little correction that I'm thinking about potentially happening in the forex markets till we get support kind of coming in. So those things kind of running together. I hope I've kind of explained that. Strength in dollar index, strength in equities has run up, but this could run out of steam in the next couple of days. We've got a FOMC Tuesday, Wednesday, and then have a little bit of a September effect kind of falling off. And then the strength kind of comes back in as these kind of reach support levels and come back up again. So this is the seasonality trade that I want to talk about for the next couple of minutes. So we've had the 5 seasonal trades, and I'll reference the 5 seasonal trade backed by fundamentals article on the website. These are the ones I like because they seem to be based on fundamentals. 1, 2, 3, 4, 5, and the first one is the Santa Claus rally. The second one is tax time. Third one is the 4th of July. Fourth one is September effect, which is what we're lining up for in the next couple of days. And then the last one is Thanksgiving, and then we roll around again to the Santa Claus rally from late December into January and so on. But this one is the September effect, and on the website talk about this weakness early September into late October, and it's driven by tax loss harvesting by mutual funds. Third quarter profit warnings kind of coming out by corporates that think they're going to miss their year-end targets. We've also got an interesting thing, with the Apple iPhone announcement this last week. Usually there's Apple announcements and new product releases. There's strength leading into the release, and there's weakness after the release. So that kind of happened last week, and so that kind of could play into a little bit of a weakness as well. And then we've got FOMC coming up this week, and so who knows what that announcement is going to be, but it's this all around this tightening what does that mean for equities? What does that mean for bonds? But let's look into this in a little bit more depth. And this is what the pattern looks like seasonally. So around this time period, we have some strength into mid to late September, leading into weakness and then bouncing out of that. And the seasonal indicator here that you can download from the website, so these green patterns above the zero line is basically positive days, up days, then the red below the zero line is negative days, sell-off days, and then a little bit of strength here. So the pattern looks like this, and I'm just put my marker on here. We have a few more days of strength, seasonal strength to run into this period, which will be the end of this week really, and then after that we have about 2 to 3 weeks of weakness, coming into some more strength beginning of October. So last year's pattern actually played out pretty nicely. So the green line here above the zero line means that we'll have some positive days. Then below the zero line with this negative red line here shows that this is the weakness here, and then we have a little bit of a bounce back at that point. So it's a V reversal, not unlike the tax time type effect that we had. It's a sell-off with strength. So this one is a little bit of strength into a sell-off and then kind of bounce from there. That's how the seasonal pattern looks. Just wondering if I can pull on the previous patterns. Yeah. So this is looking back on a weekly chart at those seasonal patterns, and this is a little indicator that's part of that download for the seasonal indicator. This is showing the same time week during the year where we had that we are in currently. So you can look back over time and see how did that play out. If this is today, back in 1998 for example here, you can see, if I pump this up a little bit, so here in 98 it led to weakness, a V reversal, weakness into strength, again weakness into strength. This one here come 2000, weakness, the strength was really weak at that point because we're in a downtrend at that point in 2000, so a very weak little rally there. 2001, it was a little bit stronger. Here 2002, weakness into strength. I think you get kind of the picture going on. So you can look back historically and just see how that pattern kind of played out, weakness into strength, weakness into strength, and so on. Some of these years, was strong uptrend and there was hardly any weakness at all. In other years where we maxed out, 2007, the pattern doesn't work at all. But most of those years it was kind of fairly decent, and last year was a particularly nice kind of little pattern here where we had kind of weakness into strength. So that's what I'm looking for kind of in the next couple of days. And if you look at the indicator just plots what is likely to happen over the next few days based on that historical average. And so what it's suggesting over the next couple of days, we'll have a little bit of strength, and then if you go back and see what the indicator was doing a year ago, you can see that we lead into that weakness there. So there we go. Remember, we've got FOMC this week. So Monday's going to be decent trading, but Tuesday, the first 45 minutes, and that'll be about it until the FOMC announcement comes out on the Wednesday after 2. Then it'll be kind of the usual shenanigans and the volatility and so on. If we play out with this seasonal pattern, it means for the next part, the next week, basically some strength, but then after that some weakness. And that's not unusual for FOMC. The way the FOMC announcements tend to be playing out is that they are positive into the with the FOMC and into the FOMC announcement, and then it's about a day or two after that announcement that the market, if the market's going to weaken, the market does weaken. So that wouldn't be unusual. For me, what I'll be looking for is the key levels come when we look at better sine wave on these higher time frames. Now, I've been saying for a while now, this is this usual setup of high time frame charts with a factor of 3. 45-minute chart, 135-minute chart into the daily chart here. 45 minutes times 3 is 135 minutes. 135 minutes times 3 gives you a daily chart. We've been playing around this pullback to end of trend pattern for a long time on the daily chart, but I've said this is not going to be all over until we have the pullback to end of trends rippling through from the lower time frames. So on the 45-minute chart, it was a pullback to dirty end of trend here, and then we had exhaustion, bearish divergence kind of come in. But on the 135-minute chart, we're playing with pullback to end of trend. The market's weak because we've dropped below support on the 135-minute chart, but the cyclical energy still has to work itself out. So I'm looking for this, support to dirty end of trend pattern to play out with a little bit of cyclical support still there. As soon as that cyclical support kind of works its way out, for me, that means the cyclical energy on the upside, the trending moves on 45-minute and 135-minute are exhausted. We've got them on the daily chart, and that's when we can start to see some exhaustion kind of coming in. So critical levels to look at on the E-mini about 1970. How we play out around the 1970 level is going to be absolutely key. Again, kind of going down to my highest time frame tip bar chart, the 40,500 tip bar chart. We've had this pullback to end of trend. We've had exhaustion patterns. We had the first rush of weakness here, where people were just anxious to get out with this exhaustion sell pattern here, and then a final kind of burst of activity here, and it's been weak ever since. So how this plays out around kind of 1970 is going to be key. I think we're going to have just a little bit of strength into FOMC as we test kind of this level, and then busting through kind of 1970 on the downside after that kind of week has played out is a potential kind of seasonal trade to look for this weakness that is likely to happen September, end of September into October. That is what is kind of interesting. So there we go, a little bit of a recap. So just the euro call on the left shoulder there, way too early, should have been waiting for announcement by ECB and Mario Draghi. And then we got this seasonal pattern, another nice little one kind of lining up for a September effect, but we just need a few days of marginal strength to come into a pattern that could lead us into that kind of weakness into late September into October, if it works out. And we'll kind of play the support and resistance levels and break into trend. Don't try and kind of forecast it. Just play the setups as they appear. So there we go. Hope your trading is going well, and looking forward to getting back into my trading.